Hi, it's Larry Gaines, PowerCycleTrading.com. In this video, I want to show you a potential for a kind of breakout trade on a longer term basis for the 10-year notes. Okay, so here's a weekly chart. I call it long term, and you can see this is what we call a volatility squeeze. So it's in a weekly squeeze here. These dots represent a kind of period of consolidation. Now we had a daily squeeze that did trigger, and then you can see that the market kind of pulled back on the 10 years, and then you can see it breaking through this trend line. So we've got a potential target up here to that spike high. Now, one way to play this for a very low risk, defined risk type trade setup is we can use the ETF TLT. So let's take a look. So here's a chart, a weekly chart of the TLT on the left and a daily on the right. So you can see the volatility squeeze triggered here, pushed up, but we had this pullback, but now we're back through this trend line. So see this long-term trend line break, and that orange arrow is what we call, that's a 5 crossing the 13 exponential moving average cross, which is a pretty strong pattern. Now, the other thing to notice is that we've got, if you look back here, the last time we had this cross, this is what we call a reversal signal. This was back in November of 2018. So we came from a very oversold situation, and we had the reversal, and then a really good trend to the upside. So we just got the reversal here on the weekly, and this has potential for more movement to the upside. So when you look at the Fibonacci levels, then we're into that 382. If we can get through that 382, then the next target's going to be this 140, 150, and then up to 143. So a lot of potential for this longer term. So one really nice way to trade something like this, where you're coming from a big sell-off and you're getting a potential for a market bottom, is one of my favorite strategies. Is what we call the calendar diagonal. So this is a trade that we set up today on TLT using a calendar diagonal. So this was the trade setup that we did, TLT. So this is a calendar diagonal. Kind of looks like a call debit spread, but it's very similar to like a covered call. So what we did, we bought the 20 March series $140 call. So that's out in the 20 March. So this is about 58 days out for $2.45 per contract, or $245. Now then against that, we sold the 7 Feb series 142.5 at 45. So we got into the spread for $2. So the maximum risk is $2 or $200 per spread, and it's a $3 wide spread. So it's a pretty decent ratio that we got in for $200. Now, if this moves into our profit zone right here of 142.50, that's where you start taking it off, peeling it off from an income standpoint. So you can see here, if we were to go into, let's say, that target of 142.50, let's say at the end of January, let's say it's trading right here at 142.50, this will be up about $80 on our risk of 200. Now it'll keep going up, and then we kind of cap our profit right there at 88. But this is a strategy that's based on taking advantage of theta decay, and you can see the positive theta here of currently $93. If I put it back here to where we are today, you can see the positive theta of $96, 0.96 per spread. So this will just increase as we get closer and closer, to that expiration. So you can see here on the 24th, it'd be up $1. On the 30th, it's going to be up, let's see here, let me back up here. 31st, it's going to be up 93 cents. So that's the beauty of it. You can see that the theta decay is where you really take advantage of this, plus that the spread of the $2.50 wide spread. So we get a good benefit from that. Now, if things go against us, what we can do is we can close out the 142.5. So let's say the market stalls out. We could close the 142.5, and let's say this goes down to 5 cents. Then we take $40 profit. We reduce or adjust down the cost of our call, and that would reduce it down to, let's say we got out of this at 40 cents profit, that would reduce it down to 240, and then we sell the next series out. So it's a really great strategy for coming off of bottoming pattern like this, and it gives you potential from a kind of an income, or if we need to, we can just kind of keep rolling this by covering back in the 142 call and then selling another series out, or we could convert it to calendar to sell at 140. So just a lot of different things that we can do with this type of strategy, but it all starts with the direction, and right now the direction looks pretty decent for an upside move to TLT, for a potential bigger upside move over time. Hope this helps, and I'll talk to you on my next video update.